following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're a little bit lower in stocks this morning, but nothing exciting going on as of yet. I have posted in the quote by Warren Buffett about derivatives because I think we have a big problem in the markets. It's not here in the U.S. It is over in Germany with Volkswagen and also with Deutsche Bank. Both of those look extremely vulnerable to a really serious, real serious meltdown. First, we'll take a look at Volkswagen because it was down almost 30% on Friday. It's down another 7% per day today. It's now down below the 786 retracement of the low from 2010. Which is a very, very negative chart to say the least. But the one that is even more ominous is the one from Deutsche Bank, which is the largest bank in Germany. They are in very serious trouble. And if you take a look at this chart here on a long-term basis, you'll see here that it has a price objective that goes into the negative, well, actually to $4 a share. We're trading at 26 and change, I believe, right now. But this chart looks almost exactly like the chart of Lehman Brothers in 2008 before it gave up its ghost. I had a very personal experience with that Lehman Brothers and also with Bear Stearns. I had two very good friends that I'd been friends with for many years, guys that I had worked with at Drexel that had switched over, one to Lehman Brothers, the other to Bear Stearns. And when those stocks, when Bear Stearns hit, I think it hit 130. My friend Jeff had like $4.7 million in stock. He was making well over $1 million a year. He's making a lot more than that now because he went out on his own. But I told him, I said, buy some puts, to lock some of this stuff in. And so he took a couple $100,000 and he bought some long-term puts on Bear Stearns. The stock dropped to zero, of course. I think he got 100,000 out of his 4.7 million, but the puts made him $1.6 million. So he got quite a bit out of it. He's still a young fellow, so he came back really strong. The other fellow didn't quite do as well at Lehman Brothers because this Lehman Brothers chart was very similar to what we have here in Deutsche Bank. It was right at a little butterfly pattern. It had all kinds of support. I believe at 20. I don't remember the exact price. I think it was $29 or $30. And I told him, I said, if it gets below 28, I said, this thing has got, this has air below it. And he didn't do anything. And, he lost all of his stock options, which, when you're young, it's no big deal. But when you're in your late 50s, it's not a pretty sight. And that affected his life for the remainder of his life. He passed away, I think about 7 or 8 years ago. He never did recover, from that devastating loss of his stock options and profit sharing and everything else that he had. So this is some real serious stuff that's going on here in Germany. They have 600,000 employees. And what's so ironic is their slogan, "Truth in Engineering." Oh my goodness, that couldn't be, could be probably the worst slogan ever. Now looking back at it, but that's a very, very sad situation in itself. The Deutsche Bank is Germany. I don't know how they're going to save both of them. If they both go, it's going to be really difficult to do it. But maybe with quantitative easing 26 or whatever they come up with, they might be able to do it. But both of these stocks look like they are really in serious trouble. I don't see anybody would want to buy Volkswagen right now. I would wait for it to make some type of a bottom. And since we're below the 786 now, I wouldn't even consider, what's going on. I mean, that has to hurt German pride a great deal, which, we don't like to see that happen to anything. Toyota had a big problem, I believe, a couple years ago with something, but not nearly as serious as this. From what I've read, it's something that is really goes deep into the German auto industry through Porsche and Audi and BMW. So far, we haven't heard anything about Mercedes-Benz, but this looks like it's pretty serious. Whether that the stock is telling you that it's serious, I mean, that's all you have to do is to basically look at it. Now, we had this spectacular solar eclipse last night. Let's try it again. Lunar eclipse with the full moon. And it was, we got a real brief glimpse of it here in Philadelphia because it was so cloudy, but it did give us a shot there of about 20 minutes right after 10 o'clock to start to see it, and it was really spectacular. I went on the web and I saw some pictures of it from other parts of the world, and it was really beautiful. We won't see another one like this until, I believe, 2033, I believe, is the next time we see one of these. So we do have that. That should be a possibility of a short-term bottom, and we did hit, the exact 61% retracement over the last few days range today in the Treasury bonds. So far, that has stopped the the market from dropping in stocks, at least early. But the overall bearishness still looks like it wants to go down. Far lower. Even if we get a little 3 to 5 day bounce in here, we're going to be looking at something really serious. So that's it. Now, someone's asked a question about the derivatives. Folks, we really don't know a whole lot about these markets because some of these things are derivatives on derivatives on derivatives, and they're not regulated, and so they can do a lot of things. Once they took away the Glass-Steagall Act, these commercial banks were able to act like investment banks. They can do all these exotic things. And as that first chart that I posted from Warren Buffett shows that, he believes that these derivatives are weapons of mass destruction, and I believe that too. I mean, when you stop and think, they say that there's 1.5 quadrillion. That's 1.5 trillion. I mean, that's just unbelievable that there could be that much out there. I can't believe that number, but that's what they're saying. They say that I saw on Bloomberg that Deutschmark had a $85 trillion derivative business. And then also with Volkswagen, they have a tremendous amount of financing business for automobiles all across Europe. And so if their credit rating starts to get hit, that's going to affect credit loans and a lot of things. So this has a really big, yes, index futures are derivatives, Bill. They sure are, because they're derivative from the cash index itself. That's correct. That's correct. And that's exactly what they are. And but the problem is, they have, they are derivatives. They're derived from a stock index. That's what they derive from. That's really what they're doing. Back in 1982, when the Merck came out with the S&P 500, they wanted the Dow Jones Industrial Average, but the Dow Jones family would not allow it. And that's basically, what they're looking at, and that's pretty much what you're looking at. With our stock indices, they are priced through a commodity exchange where there's regulations. Whereas with the derivative markets and some of these things, there are no things. With these credit default swaps and CDOs and all the others that's just that. Who knows what's going on with any of that? You really don't know. We're having a pretty good sell-off today in all the commodities again, silver and gold and oil. That's primarily for the fact that the dollar is strengthening. The Australian dollar is weakening again, going down to some serious support down around 69. Same way with the New Zealand dollar. And those are the things that you're probably aware of already, but that's the primary thing to look at. But we are due for a a bounce in stocks. Whether it's going to be just a few days or not, I'm not sure, but I believe that our bigger low will come in sometime around October the 6th. That's where the Bradley model comes in, and that's where the work of Bill Ehrman says that we should be, coming down into that level. So we certainly want to keep an eye on that of what's going on. So we'll have to let the markets tell us, what we're going to look at. But we hit some pretty serious things here last night in some of these things. For instance, gold broke below the 786 this morning. It should have held 1130. It didn't. That tells it's heading probably, down lower at 1120 or so. And silver still looks like it wants to get to 1450. Failing there, it could look at new lows again also, because there's a lot of pressure, coming in. Folks, what I fear the most, and you hate to say that, but is an outlier event that could be Deutsche Bank, or it could be, Volkswagen. It could be something else that's not even out there yet that's going to come in and just shock these things, and we're going to lose liquidity. And that's where the real problem lies, and you don't want to see that happen. You don't want to see a market like we had on August the 24th. You'd rather see a market that just goes down, quietly, day after day, death by 1,000 cuts if you're long, but you don't want to see these crash-type scenarios. There's a possibility of one coming, of course, because no one, everybody's looking for it, but no one thinks it can happen, and it might not. I don't know. All I know is that the overall, if you just take a look at what's really been happening to the market, and we look at this every day here on TFNN to look at it, and this is really the story that you really need to listen to, and that is the fact that the breadth of the market just keeps getting worse and worse and worse and worse. It just gets it's just not getting any better as we go through day after day. We're having new lows, more new lows and new highs all the time. There's a few stocks that are doing really well. Nike is still doing pretty well, but the rest of them are not doing anywhere near what the others are doing. We've taken out the lows of Friday, which were supposed to be, good support, because that was right at the 61% retracement, and we broke below that. And that's primarily, what we're looking at here in just a few short hours from Friday. We gave up so much of it. And remember, last night we had a 20-handle rally in the S&P. It rallied 20 points. After going down, it rallied all the way up to 1928, and then went down, dropped 30 handles. So these markets are getting volatile, and we'll see. But I really think that the key to these markets, at least from my perspective, is to look at keep an eye on two things. Mainly is Deutsche Bank stock, which is DB, and then also keep a real close eye on the euro, because they're going to be really tied together, because the Deutsche Bank, the German bank, and Germany's been the whole power behind this thing, so the euro project. So we'll see. So we'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. news. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and I'm going to go through a couple of charts here that I think have some interest to us. One is the IBB, which is the Biotech Index. It was one of the leaders on the way up. It topped in July. The rest of the market topped on, May the 19th. That's when we had the new moon and Mercury retrograde, and that's where the real market topped. That was the New York Stock Exchange Index. Of course, this one went up a little bit higher. It was the leader of the market. It was down 10% for the week. It looks like it's going to be a little lower again this morning. We're testing the 786. So, you can see that we've got some real serious problems when things drop, 10% in a week. When you have to stop and think, if you're in Volkswagen and you lose 30% in one day and another 7 or 8% today, that's making you believe that, maybe there's something, really seriously wrong with some of this stuff. And that's what we've got to be, certainly aware of when we're watching these things. The next one that I think that really needs our attention is the stock of the ETF for the banking index, BKX. It was up on Friday. Pretty substantially up a couple of percent. It looks like we've tested that low in August. Whether we get below that or not, I don't know. But here again, both of these were the strongest of the whole market. They both topped around July 20th. and they have both broken, quite a bit from that level. The rest of the market had topped earlier, and it's going down even faster. But like the breath says, it certainly doesn't look like the market wants to go, crazy to the upside from this level. So we'll see if this is going to be we're going to see what really happens. I just can't tell you enough about how important what's going on over there in Germany with Deutsche Bank and Volkswagen. I'm focusing a great deal of time, and I haven't seen a Volkswagen chart in probably 5 or 6 years. And I imagine the people that were long are wishing they hadn't seen one either. But the Deutsche Bank chart, actually, they both look terrible, but they both look equally terrible. But the Deutsche Bank one is even more significant because it's it's one of the big well, it is the biggest bank in Germany, probably the biggest bank in Europe. I know it's the largest commodity or forex operation in the world. At least it used to be when I was over in the UK several years ago. I know that they were huge, and with if they have all these derivatives and there's a problem with counterparty risk, this is what occurred with long-term capital. And, this was the group that was formed by the Nobel Prize economists that went under with John Merriweather, back, I believe, in 95 or 96. And that could happen again. But a bank, losing a bank of it's not just Greek loans, Terry. It's just the derivatives that they have with everything, and the financing. Much of the financing that Volkswagen gets is also through, Deutsche Bank, and there's all kinds of, other things. And then we have this Glencore liquidation that is going on, and that is another thing that's going on. So we'll see. I heard that the guy is going to get a $23 million golden parachute. I think he's going to need that for legal expenses, if you want to know the truth, because I don't think there's any way that something that's that deep into the illegality or legal things was not shown somewhere in Volkswagen, because they're a very, very tightly run company. So they certainly should know what's really happened. So we're going to see if Europe is going to come up with their too big to fail program like we had here. But it's a little different now because with this quantitative easing, the government's put in $4 trillion on our side. Who knows what they put in on these other sides? So we're in an area where you got to be really careful in here, folks. And my biggest fear, and I hope that it doesn't happen, is that we run into these pockets of illiquidity. If you're on the right side, you make a great deal of money, but you don't get to trade as much because there's just nobody on the other side of the trade to take it. And that's what I don't want to see happen, because we've had this tremendous amount of liquidity being poured into these markets, and not just that, but you want to see a chart. We got a break coming up here, but I want to show you a chart that really explains pretty much what's happening in China. All you have to do is to take a look at the chart of Wynn casinos, and you can see what's happening. It's dropped 90%, almost 90% of its value already. And it just continues to go down. It just basically says that there's just very little business going on in Macau. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, let's get this back here. Okay, hold on just a second. I got to do something here. There we go. Okay, now we've had a gap down now in Volkswagen. It's down more than 10% from Friday. That makes the total loss thus far close to 40% in just a couple of days. Also, Deutsche Bank gapped about another 6 or 7% lower. So both of those are telling us that there's some problems coming somewhere. The things that I'm really sort of focusing on, folks, from a just from a historical perspective of setting through some of these things before, is to watch where the money is. You know, go back to the old thing with Bernstein and Woodward on Watergate, and watch the money, and that's where the euro would come into play. Right now, we're trading at 111.58 in the euro. That's just a 61% retracement off the low we made Friday. That's not anything exciting to happen right now. But if you see the euro trade below 111, that's telling you that the acceleration is most probably starting. And if you see a move of more than 200 pips in the euro, get ready. Folks, I don't know why gold and silver are trading as low as they are, but frankly, I think you ought to buy some silver coins, $1 rounds. Even if you don't make any money on them, they're beautiful coins. But when bad money drives out good, it's got to go somewhere, and most probably it'll be into either cash or either gold or silver or something like that. But my gut instinct tells me that you ought to be thinking about putting something away just for a rainy day. I'm scared. I really am. Hey, I'm on the right side of the market, and I'm scared. That's the same way as I was in '87. '87, I was so scared that it scared me. I had made so much on that day because I was short, and I was short a considerable amount. I mean, I was short 8 of the big S&Ps. That would be equivalent to 80 S&Ps right now. And I got out of mine, most of them. I kept 2. With the Dow down 300, I cleared out 6, and I kept 2 for another 100 points down, and then I was out of it. But I was long bonds, and the bonds were down a half a point. And when you stop and think of it, bonds being down a half a point with the Dow down 350, which was a lot. That was down 15% in one day. You can imagine what that would be like today. It'd be like 1,500 points. And that was the trade that really would have paid off. But I got out of that because I was just afraid. I wanted to be in cash. I tried to clear out all my account and get the money sent out that day, but they couldn't do it because they were backed up so much. And then the Fed came in and changed the accounting, and bada bing, bada boom, things started to move up in the right way. I don't know if it's that way right now, but I don't want to go through that again. That's what I'm trying to tell you. I think you should always have some little gold and a little silver on hand, especially when you stop and think what these folks have done, these banks, what they've done with these things over the past years, as far as how much they've put money into these things and not really gotten much out of it as far as playing with our money. So we'll see if that's going to make any difference at all. We'll have to let the markets decide if they're going. But we do have a potential here, though, for a little bottom just because of the new moon. And let's try it again, Larry. The full moon and the lunar eclipse, that's usually a pretty good sign of a bottom. And also the bonds have not gone crazy. The VIX has certainly not gone crazy. So, there's also that possibility that we could be holding in here. And that would be an indication that, yes, we do have a potential for, some type of a bottom in this area. But I think it will be short-lived just for the fact that we have so much problems out there, not just here in the U.S. with some of the things that we have, but with what's going on in Germany for sure. The Canadian dollar had a little bit of a rally this morning, getting back into that sell zone that we talked about last week. The Australian dollar, that's one of the reasons why the commodity markets are under so much pressure today, is because of the pressure on the Australian dollar and the New Zealand dollar and the Canadian dollar, because of the fact that these are commodity related, and that pushes the price of crude oil and gold and all the other things down at the same time. So we've got to to focus on that as what we're watching some of these things. So the grains are holding up a little bit. That's a good sign from the commodity section, but that's the only one that is actually holding up with any type of a bottom at all anyway. So we'll see if we're going to hold up at that level or not. That's the $64 question. But right now the market is down just a little bit. It's not the end of the world, which is good. And we'll see if this is going to be the case here, just to hold on, and we'll find out if the market is going to continue to go down. I believe it's going to go down no matter what. over a period of the next 8 trading days, bottoming sometime around October 6th. That's the date of the Bradley model that we have. But even more importantly than that, that's the date that Bill Ehrman from Ehrmanometry has forecasted, and he told me this well over 6 weeks ago. And he has a tremendous, accuracy record of anything that I've ever seen. I've never seen anything better. And so we'll see if that is the case. So we do have a potential here for a short-term bottom. If you stop and think about it, the market's actually acting relatively well, given the fact that you've got Volkswagen down another 10% and Deutsche Bank under a great deal of pressure. The market so far early in this morning is still holding up relatively well. And when you look at the VIX index, there's certainly not any fear in the VIX index at all. I mean, there's no fear. In fact, when I did my work over the weekend and I look at this, I said, my God, I said, what is it these people are not seeing? Maybe I'm totally wrong. And hey, that's also the possibility, if that's going to be the case. But this is what's happening with the VIX index, is it just doesn't have a great deal of, a lot of friends right now, because nobody is afraid. And whether that's going to be a good thing or not, remains to be seen. But it's telling us that's what we're looking at. You're going to have to bear with me for 1 second here, folks, because I'm having my alert go off in something that I've been watching for a while, and I wanted to double check to make sure that it was correct. The crude oil so far has held the 44.70 level, which was a 61% retracement. We got down to 44.60, and we're just a little above that now. The gold has held above the 786 by just a little bit. It went about $0.50 below the 786 retracement. Silver didn't quite get to 14.50, which I was really hoping it would get to, but that's still a little early. We'll see if that'll be looking at the case. But I really believe, after looking at all this over the weekend, given the fact that what's happening with Deutsche Bank and what's happening with Volkswagen, there's a canary in the coal mine there, folks. That could be a really big outlier event. And remember, if you weren't around in 2008 and you weren't trading, go back and read the history of how, Bear Stearns was lost and how Lehman Brothers was lost. Lehman Brothers was the largest bankruptcy in U.S. history. It was I think it was one of the largest it was the largest investment bank. And of course, their greatest competitor was Goldman Sachs, and they were the one that was the big benefactor of them, going under. So, keep all that in mind as you're watching some of this today. But we have a situation that deserves your attention. It could go day by day. Maybe this is all. They'll come out with some really great news that all this emission test was all baloney. I don't think that's going to happen, but you never know in these types of environments. We'll have to wait and see. So we'll see. So far, the IBB went down and it stopped exactly at the 786 the first 15 minutes of the morning. It hasn't broken below that. It's had a little bit of a rally from that level. That could mean something. But I really think that we have this new moon that's here. Let's try it again, Larry. The full moon here with the lunar eclipse, and that should give us a bounce. How much of a bounce, I don't know. We rallied, like I mentioned, 30 handles last night, and then we, gave it all back. So we're definitely in the volatility range of we're going to see these big ups and downs. I would take any really good rally in the S&P as a chance to be a seller. That's the way I would view it. And I don't think if we do get a rally, it'll be much more than a 3 to 5 day rally of a very small magnitude, and then we will, continue to go down, into lower territory. That's the way it appears from my perspective, at least looking at these charts. And boy, some of these look really, really bad, folks. They have some really serious problems, with them. So you want to be really, really super careful. Now, there is one index that is in a really nice Gartley pattern. I'd like to share that with you now. So if you have an interest in this, you might want to take a look at it. If you're interested in buying something, this is a perfect setup In the semiconductor index, we have an ABCD pattern forming right at the 786 down here at this 163 level. We have time and price coming together. The high from A to B is equal to the high from C to D. So that's coming in. And what we'll do is we'll just go and we'll check to see how this opened this morning, and we will give you an idea if it's gapped below it and all bets are off, or it still has a little bit to go. Right now, it's actually acting holy cow, what is wrong here? Have I got the wrong chart? Wow. Boy, oh boy, something's really wrong with that chart. Disregard the chart that I just sent up. That's impossible. They look so different. Wow, I don't know what happened here. What have I done wrong? I know it's the same chart. I don't understand what I could have been. Yeah, the IWM looks really bad. You know, that's the problem. I got the wrong chart up there, folks. So give me a break here for a second, and I will try to get this right one up. I don't know why I have the I don't even trade this thing, but someone brought it to my attention, and it looks so pretty that I just don't understand why when I put up the other one, it's not the same thing. So we want to be able to to focus on that. I do want to talk a little bit, since we were talking about money a little bit earlier. We should take a look at this euro, because the euro looks like, see, I mentioned to you, if we get it below that 111 area, it sets up 107, and below 107 it sets up par, and I believe that's where we're going to go. We completed that big ABCD here back on the 24th of August. That was right at a 382 of the high from 2014. It was a perfect ABCD pattern. We dropped down into early September. We rallied up to the 61% retracement, and now we've sold off. And once we get below 111, we'll be shooting towards 107 without any trouble at all, would be my guess in the euro. So follow the money. That'll tell you pretty much what you're going to be looking at. So we'll see what's interesting. Now they're posting some really interesting information on counterparty risks and Glencore at zerohedge.com. You should go in and read that, folks, to understand some of the things that are out there, because this stuff is relatively new, and that's a really bad situation for the markets when you don't have liquidity coming up, and we have no way of knowing how much of these things are in the realm of some of these, how do we say it, derivatives. We don't even know what some of them are. They're so bad, and we'll see. Anyway, the market's weakening up a little bit, and like I mentioned, keep an eye on, we have to watch Deutsche Bank in Germany, and also watch the Volkswagen, because Volkswagen looks like it's going to have to be bailed out by somebody. They have real problems there, and Deutsche Bank is right behind them, because they're all in the same bed. So we'll see if this is going to be something of a great significance. We'll have to wait and see. That's what we really want to keep an eye on. So we're breaking down pretty good now. We're down about 42 points in the NASDAQ, making new lows. The S&P's making new lows. The Dow's down 150. So we're starting to see some increased selling in here, which shouldn't surprise most people, because these markets look very, very bearish, and they certainly don't look like they want to go up a great deal. But that's always that can change in a heartbeat, as we know, and we'll see if that's going to be the case here or not. But we are starting to see some increased selling through here, which will most probably increase during the day here. This should be a bottom day, but like we mentioned, this thing could also just literally give up, and I'm a little scared. We'll see what happens with it anyway. So we're going to come up here with a little break here with the Dow down about 140, S&P down 17, and the NASDAQ down about 43 so far. Okay, one other chart here before the break that someone asked me about, and that is the gold chart, and I'll put that up right after the break here.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, the chart that I had posted earlier was not the SOX index. It was the OSX. Little difference of letters. Being dyslexic, I don't think I am, but who knows. Anyway, we're weakening up a little bit more. We now got the NASDAQ down 50, the S&P's dropping, and others down about 20, the Dow's down close to 200. We're starting to accelerate to the downside, which certainly shouldn't surprise anyone given the news environment that is going on, around the world. So we'll see what's happening. The overall breadth of the market continues to be very, very bad. It's a good indicator of, if there's any buying coming in, and with news like we have from Volkswagen and Deutsche Bank, it's telling us that there's possible bigger problems out there across the pond than we might want to look at. The euro thus far has held that 61% retracement of yesterday at that 111.50 level. But if we get below 111 in the euro, then all bets are going to be off, and you're going to start to see some real panic coming in some of these markets, because when money starts to move like that, and it's not going to have many places to go. It could go to the bond market, of course. It could go. I know it doesn't look like it wants to go into gold and silver. I mean, gold has held the 786 retracement down there at 1127, rallied about $4 off the bottom, and silver has rallied a little bit, but not really very much as of yet, because the real selling could come in, just a little bit later here, and that would be even greater to look at. So we are starting to accelerate to the downside in stocks, and it just doesn't look very good, folks. This thing with Volkswagen and Deutsche Bank, do not underestimate that, because of the possibility of the derivative problems that we have with Deutsche Bank, and then also the fact that Germany, that's our largest employer, 600,000 people, and not only that, but it finances almost all the cars in Europe through their financing arms. That means their credit lines are going to drop up. That means you're going to start seeing some real serious things happening in some of these markets. So just keep that in mind, when you're trying to find something to buy. That SOX index, by the way, went right below the 786 right away, so that would not be a trade you'd want to be looking at. So live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.